Hello traders, Gary Wagner here. It is 12:15 in Honolulu, 5:15 in New York on Monday, 3rd day of March 2025, and this is the evening report for gold and silver. Gold prices rallied sharply higher in New York trading today, recapturing Friday's losses and pushing beyond the key psychological $2,900 mark. This as the US dollar dropped significantly. Gold had a strong recovery today, gaining $52.60 or 1.85%, taking the most active April contract to $2,901.10 after opening at $2,872. Gold is trading overseas up an additional $1.70, currently at $2,902.80. Of course, we are long from $2,853. We also moved our stop up today. We will cover our current trade in detail when we pull up some charts. Concurrently, we saw dollar weakness, with the dollar giving up 0.95%, taking the index to 106.48. If you recall from last week, we witnessed gold give up tremendous ground from recent all-time record closing prices and selling off to a low of $2,844. As gold began to move back up, we sent out a trade alert entering our position at $2,853, initially placing our stop $10 below our entry price at $2,843. Of course, today we saw gold surge, gaining double digits, and we sent out an additional trade alert recommending that you trail your stop to $2,864, and for those that had multiple contracts, to consider liquidating up to half of those contracts. So to put this most recent move into perspective, we are under a model that looks at the lows that came in on December the 18th at $2,600 up to the all-time record closing prices that occurred last week as a primary first wave. We believe we've entered our corrective wave 2, which most likely will unfold as some sort of an A-B-C correction, of which we believe we have completed our A wave, meaning the move down from $2,970 down to the low on Friday of $2,844. The bounce that we are currently witnessing is a counter wave, a B wave, which according to Elliott wave modeling could go as high as 2907 to 2939 based on the calculations of looking at a 50 to 75% retracement from the price decline that occurred during our first A wave. As I said, the B wave should go anywhere between 50 and 75% to conclude the B wave and final C wave to complete a full zigzag correction or A, B, C correction. However, what we need to focus on now is whether or not gold has upside room during this counter B wave before entering the C wave, as we are currently long. To that end, we will monitor price action closely so that we can either continue to trail our stop higher or an OCO, meaning one cancels the other, to trail our stop up and at the same time put a price order in above current pricing to look to get out and take more profits, because we do have a profitable trade and now it's about extracting maximum return based on how strong this counter wave is and where it will conclude. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.